Welcome to The Explainer. Look, if you've got Moderna stock in your portfolio, your heart was probably pounding this morning. We are looking at a seismic wave of news that had investors absolutely glued to their screens. The catalyst? A cancer vaccine that actually worked in a late-stage trial. But, as we know all too well, the stock market doesn't just trade on good science, right? It trades on valuations, massive expectations, and honestly, sometimes just pure momentum.
85%. Yeah, you heard that right. Shares literally exploded by 85% in pre-market trading. To put that into perspective, that move was on track to be the absolute best single-day gain in the entire history of the company. It's the kind of face-melting move that makes headlines everywhere and leaves traders scrambling to figure out their next step.
Okay, so let's dive into the billion-dollar question here. Breakthrough or bubble? Is this a genuine scientific revolution that you should be chasing right now, or is the market getting dangerously ahead of itself again? Today, we're going to break down exactly what happened, what it actually means for Moderna's future, and how you should be looking at this from a pure investment standpoint.
Let's kick things off with Section 1, the science of the spike, and what actually happened in the lab.
Before we even touch the financials, we got to understand the science. This whole market frenzy was sparked by a monumental joint announcement from Moderna and Merck about their Phase 3 clinical trial. The vaccine is called Intimuran, or mRNA 4157. Basically, it's a personalized mRNA cancer vaccine that succeeded in a late-stage trial specifically for high-risk melanoma. And guys, this is not a small deal. It is a major scientific milestone. It marks the very first time a personalized mRNA cancer therapy has successfully cleared a late-stage trial, especially when combined with Merck's blockbuster drug, Keytruda.
So how does this cutting-edge science actually work in practice? It's basically three fascinating steps. First, doctors take a biopsy of the patient's specific tumor. Second, they sequence the DNA of that exact tumor. And third, they design a completely custom mRNA vaccine based on that unique genetic code. The whole goal is to train the patient's own immune system to recognize and ruthlessly attack their specific cancer cells. 10 years ago, this was literally science fiction. Today, it's becoming a reality.
Now hold on a second. We do need to pump the brakes just a bit. Yes, the primary trial endpoints were met, which is exactly why the stock skyrocketed. However, the incredibly detailed numbers are still pending. We're still waiting on hazard ratios, which essentially tell us the exact probability of a patient's survival improving compared to standard care, as well as the comprehensive overall survival data. Those absolutely crucial details are going to be presented later at a medical conference. So the market is currently celebrating the yes, it worked, without actually knowing the exactly how well did it work just yet.
Which brings us to Section 2, Wall Street valuation reality, or the disconnect between lab success and market value. When we shift our focus from the pristine lab to the chaotic trading floor, you see this really fascinating disconnect. There is a glaring gap between the current price and analyst expectations. During this rally, Moderna has been trading in that $103 to $104 range. Meanwhile, the average Wall Street analyst price target, it sits near $49. That implies roughly a 50% downside from where the stock is currently trading. What this tells us is that analysts fully acknowledge the great science, but they think investors are paying today for a decade of future revenue that hasn't even been earned yet. To really wrap our heads around how expensive this stock has become, we have to look at the multiples. Right now, investors are assigning a massive premium to this new cancer platform. Because the company currently lacks traditional, reliable earnings, we look at their price-to-sales ratio, which is sitting at roughly 11 times. Compare that to the broader biotech industry average, which is closer to 5.4 times. Investors are essentially paying a luxury price tag for a platform that, while incredibly promising, is still very much in its commercial infancy.
And, well, here is the uncomfortable truth that gets totally drowned out by the hype. Moderna's core financials are currently pretty weak. We're looking at revenues declining by over 20% annually for the past 5 years. Their free cash flow is deeply negative. The legacy COVID vaccine business is shrinking, and right now, they just don't have another major revenue driver actively bringing in cash. You are paying top dollar for a company that still has to prove it can manufacture and commercialize this highly complex, individualized therapy on a global scale.
Moving right along to Section 3, the bull and bear cases, weighing the multi-billion-dollar opportunity against the risks.
So how do we actually balance these extremes?
While the bull case argues that this news completely validates Moderna's entire mRNA platform far beyond just COVID vaccines. They're already testing this across other tumor types like lung, bladder, and kidney cancer. If it works out, analysts project this melanoma therapy alone could generate $3 billion in annual sales by the mid-2030s. I mean, it could entirely redefine oncology. On the flip side, the bear case provides a really sobering reality check. Meaningful revenue is years away. Not quarters, years. There are absolutely no regulatory filings submitted yet, and creating custom, personalized vaccines for every single patient, that is incredibly expensive, logistically complex, and notoriously hard to scale up.
All right, Section 4, the smart money move and what institutional investors are actually doing right now.
Knowing all of those risks and rewards, we have to ask, what are the professionals doing? When you dig into the heavy pre-market volume that drove the stock to the moon, you uncover a really fascinating trend. A lot of large funds are actually taking profits rather than blindly piling into the hype. Why? Well, before this announcement, short interest in Moderna had been climbing steadily. Traders were aggressively betting against the stock. So this explosive positive news essentially trapped those shorts, forcing them to rapidly buy back shares just to cover their positions. It's exactly like 100 people trying to rush through a single exit door at the exact same time. It creates a classic short squeeze that artificially amplifies the rally, but it's not sustainable. Once that squeeze ends, the underlying weak financials are going to reassert themselves.
So what exactly is the smart money waiting for before they commit to significant long-term positions? They're basically waiting for 3 distinct catalysts to unlock their wallets. They want the full data presentation with the exact survival numbers, the actual regulatory filing with the FDA, and finally, some concrete, real-world revenue guidance straight from the company. Until those 3 things happen, a lot of institutions are perfectly happy just sitting on the sidelines or cashing out their chips.
Finally, Section 5, actionable takeaways. Here are the 3 things you need to know. To wrap up this explainer, here is what you really need to keep in mind for your own portfolio strategy. Number 1, the science is real, and it is a genuine breakthrough. Moderna's platform actually works for cancer, and that is absolutely not just hype. Number 2, despite that incredible science, the stock is currently priced well above its fair value based on current earnings. You're paying a huge premium for potential, not profit. And number 3, if you already own the stock, it might be a really wise move to consider taking some profits off the table, but if you don't own it yet, trade smart and wait for the inevitable pullback to buy in.
I want to leave you with a final thought to chew on. Moderna has achieved something truly incredible in the lab, literally redefining what is medically possible. Great science has absolutely been achieved here. But is it a great investment today, at this exact astronomical price point? Take a look at the data, weigh the fundamentals against the hype, and decide for yourself. Thanks for tuning in to The Explainer, and we'll catch you right after the break.